Please remember that options can be risky and investors can lose 100% of their investment. This article is for educational purposes only and is not trade recommendation. Remember, always consult your financial advisor before making any investment decisions. Hey everybody, Jim Malone here from Dallas Trading Floor. Well, I have a question for you. Would you spend $53 to make $1,000? I have such a trade today that actually may be able to do this. It's what they call a diagonal call spread on CROWDSTRIKE. And I think you'll find it very, very interesting. I'm in this trade. I just entered the trade. It's actually based on a trade by my friend Gavin McMaster in Australia, who is probably one of the greatest options traders out there. And he put this trade out today in the Investor Business Daily. And I kind of want to review it because I think it's so interesting how it could potentially profit you. You've probably heard of CrowdStrike. CrowdStrike is a software company that protects large-scale enterprises networks from ransomware attacks, all kinds of threats, and it's been doing extremely well. It was the IBD stock of the day on May 14th, and it's right now, I believe, one of about the 5 best stocks to buy. And of course, I think the best stock obviously is NVIDIA, but we just came through earnings on NVIDIA. But this stock, symbol CRWD, is doing extremely well. The company is going to be reporting its earnings on June 4th. So today, let's look at a strategy called a pre-earnings diagonal call spread on CrowdStrike stock. It's kind of an interesting trade. As you can see from this weekly graph of CrowdStrike, it's come up since November. It declined, and then starting basically in about January, it started this run, and it's moved really quite strongly up from about 100 to currently where it's at 343.08. So very strong come up, and then it kind of peaked here at 343, created another handle here. This is a cup, big cup, and then little cup, kind of this is the handle, but it formed a cup. That's kind of sometimes what you see in charts. You see these kind of fractals, and it's come down a little bit, but we do believe it's going to probably pull back a little bit or possibly go higher, and this is why this trade might be interest to you. Here's how I got into the trade today. I bought a June 21st 410 call on CrowdStrike, and I paid $3.88. And of course, remember, it's always times 100, so I paid $388 for this call. Simultaneously, I sold a June 7th 400 call at $3.35. So the net difference is $53. So $53 is coming out of my pocket. Now notice, because this is a diagonal spread, let's look at this very interesting way this works. When we're selling it, we're selling the short call, which expires on the 7th of June, and we're buying a long call to protect us to the upside. You'll notice that there's $10 between 400 and 410. We're buying this for protection. So we're buying a June 21st call. So total out of our pocket at the beginning of the trade is $53. Here is the risk profile of this trade. You'll notice where this line is right here. This is currently where we're at right now. You'll notice that we're going to, as long as we kind of stay in this range, not going down too much, not going up too much, we're going to make the money here as the trade moves forward. So keep this in mind. Let me show you the profit calculation. For this trade, we have a potential upside return of $1,220. This would be if CrowdStrike at the expiry, which is June 7th, is at $399.99, or basically $400. This shows you right here kind of where it's at. So this would be the maximum that we could make on this, $1,220. Now, this would be a return, if it happens this way, of 123% over the period of time, or $2,803% per annum. So extremely good return. Now, so this is where our break even is at about 420. So if the maximum is going to be right here at 400, but obviously we want to close this if it moves above 420, because then we'll be actually in a loss situation. So what we are anticipating is that CrowdStrike will move up, but it won't move up too much. Also on the downside, we have 337.98, or basically 338 on the downside. We're going to be closing it if we move lower than that. And obviously, we could get a potential loss if we moved down more than about 5%. I'm sorry, more than about 4% during the time. So the way we would manage this trade is that we would close the trade early if the price of CrowdStrike moves above 420 before the expiry. And of course, the expiry is on June 7th. And we also close it if it moves below 337 before the expiry. So very interesting. My calculations are that we have a probability of profit here of approximately 56.3%. So better than even. We're spending very little money for this trade. Basically, the out-of-pocket expense $53, and then of course this is how we would manage the trade going forward. I hope you like these kind of trades. If you do, why not take a picture of this QR code to my right, and that'll bring you right to the sign-up page for Dallas Trading Floor. It's free, and we put out some interesting trades and try to follow up on the trades every week or so. This is an options trade, and of course, remember, options are risky, so you got to be careful. This is not a recommendation to buy or sell anything. It's just how I'm trading on this particular trade. Thanks for watching, and I hope to see you back here at Dallas Trading Floor. Please remember that options are risky, and investors can lose 100% of their investment. This article is for educational purposes only and is not a trade recommendation. Please remember to always do your own due diligence and consult your financial advisor before making any investment decisions.